Hello, everybody. That's really an interesting topic, frontier market. I mean, so it's a really wide topic, and I think we could talk about it like a few hours, but don't worry, we just stick to the timing. We try to give you some perspective about what's a frontier market and why it's so interesting, especially for corporate investment. I will let my panelists do so. Perhaps a few words about what I do. So I'm investment manager at Untitled Ventures, and what's interesting in what we do is that we are one of the few CVC investing both in mature markets, such as Europe and the US, and in the African continent. So we know that there are differences, that there is a huge opportunity which is different in Africa and so in the frontier market. And so I think that's why I'm here today to moderate this panel, and I'm really glad to do so. So guys, I would like you to introduce yourself by telling us what you do, obviously, and why is it an interesting topic in your opinion? Perhaps you can start.
Yeah, so I'm Krishna, Chokhani. I actually wear two hats. One is from the family business and the family office side, where I manage investments and acquire new age businesses for the family businesses. The second hat I wear is I manage a venture capital fund in collaboration with a Canadian university. We run a bunch of incubators, accelerators, and corporate innovation programs across India, across sectors, primarily in the B2B space. So I'll just give you a bit of numbers around the B2B market in India. So right now, currently, 40% of the market share is held by B2B and enterprise solution companies in India, which has grown from 24% in the last year. That has been a 16% growth, making it a more favorable environment for corporates to venture into tech companies. Simultaneously, there have been about 5,200 startups in India, which is expected to grow to 8,400 startups by 2020. And with the average age of founders to 28 years, which gives a relatively young talent available in India. Each of these companies have an average age or life of 5 years at the moment, and making India the 4th largest emerging market after UK, China, and Israel. So yeah, that's about me.
All right, my name is Eric Osiakwan. I also wear two hats, though you may not see it. The first is I manage Chanzo Capital, and the second is I'm co-founder of an event called Angel Fair Africa, where every year we bring selected entrepreneurs and investors together, and we go to a beautiful city in Africa. And basically, the entrepreneurs pitch and investors invest in the company. We've been doing this for 5 years. But as managing partner of Chanzo Capital, this provides deal flow for us. So we see a lot of entrepreneurs that we can invest in. And at Chanzo, we primarily focus on what we call the King's countries. The 5 countries that we believe are leading the digital economy in Africa, which is Kenya, Ivory Coast, Nigeria, Ghana, and South Africa. We are a growth fund, and we primarily believe that it's an opportunity to take companies that are market leaders in one country and then grow them across the rest of the continent. And as you know, Africa is a very huge continent. And I'm going to now go to why I think the global south is important for you to look at. So if you look at the global dynamics today, growth in the global north, Europe and North America, is pretty much stilled. If you make investments, anything you get, maximum you get is about 5%, right? But if you look at the global south, you get double-digit numbers. And so it's just obvious that you have to look at the global south if you want to get returns. And I'll talk to also the size of Africa specifically. My colleague sort of gives you some numbers on India. But it's important for you to look at this slide, which tells you the true size of Africa. As you can see, Africa is so huge that you can fit the United States, Europe, China, and then have space for India. So if you put it in context, but both Africa and India are 1 billion people. What this tells you is that Africa has a landmass to grow much more than India. So unfortunately, my 2 friends are restricted by landmass. I'm not. One, the United Nations tells you that in the next 10 to 20 years, Africa is going to grow by 40%. Which means that 1 in every 4 person in the world is going to be African. So Africa is going to constitute 40% of the 21st century workforce. You cannot ignore that. The last data point that is important for you to understand is that the population of Africa is 70% youth. So demographic dividends is on Africa's side, and this is why you must look at Africa.
Great. Thanks, Eric. Thanks for setting the context. So I'm Vishal. I also wear two hats like my fellow panelists. I work with a company called Tracxn. It's a startup research platform. I lead one of the European teams. We sell across VCs, CVCs, innovation teams, accelerator teams, industry bodies, and the likes. So presently tracking around 500,000 startups, 140 plus countries, 20,000 business models, 250 plus business sectors. So we pretty much track all the startups of the world. Apart from that, I'm quite active in the ecosystem in India. I mentor at a couple of corporate accelerators. I mentor 10 plus startups in India. So quite understand the ecosystem quite well happening in India. So like my fellow panelist, Eric, gave few numbers. So just want to give few basic stats about India. As you all know, obviously it's a 1.3 billion population. Like Africa, 65% youth population, so ready to work. Second largest English-speaking population in the world. Grow 4x in the next 5 years, so it's going to be across the US. Presently largest consumption of mobile data, which is like 11 GB per month, which is like unheard of, and going to go 4x in the next 4 years. So yeah, basic stats on India. So I think laying that foundation about India, I think there's a lot of scope and opportunities in India.
Thank you so much for this introduction. I think that Eric, you told it that there is a huge opportunity in Africa. Same with India. What's interesting is that these two countries, or continent, are comparable because you told it that there is the same amount of people, the same GDP somehow. The internet penetration is 30%-ish in these two areas. Although obviously it's very different to a lot of extents. And I would like you guys to perhaps to come back to a point which is, I think, interesting, which is the investment in itself, especially on the landscape of investment when it comes to invest in startups. Is it more local or international investors? What are the way to invest in these countries? I mean, what's the landscape? Can you give us a glimpse of that?
Sorry.
Okay, I will start there. So, I mean, I'll give you my personal example. So I trained as a network engineer, and in the late 90s, I started building companies across Africa. I built ISPs. I built about 14 of them in 32 countries over a decade period, which was the period that Africa got connected to the world. Now, the interesting dynamics with Africa is that Africa connected to the world in a very different way, where we actually went straight to mobile. So in Africa, this is the computer. It is not the laptop you have or the desktop. Most people have cell phones, and that's how they access the web. Now, that means that the dynamics around how the African interacts with the rest of the world is totally different from the way the rest of the world interacts with each other. Now, I got into investing because two guys who left college reached out to me and said, would you like to be an advisor? And then next thing, they asked me for money, and I had some, and I gave them some. And then the company went cash flow positive in the second year and then profitable in the third year. These were two guys who were out of college, no experience, work experience, started this company. And then stupid me decided to be an advisor. And then lucky us, we went cash flow positive in the second year and profitable. And the company today, they say we're on track to make 20 million US. And we are now in 4 African countries. And we are a mobile value service provider. We provide mobile value added services on the back of the mobile operators. So we don't do voice. We do the non-voice services that mobile operators don't do. Right. Now, this illustrated an example where you can actually break through in Africa, even though African countries are very different. So in terms of the investment landscape, you're right that Africa is not homogeneous, right? But the dynamics is that we believe that there are certain countries that are leading the digital economy, and these are the countries that I mentioned, are the Keynes countries that we focus on. In terms of investments, we've seen investments grow in the startup space in the last 3 years from annual investments of about 200K. Last year, the total startup investments in Africa were about $600 million. Right. And this is a startup industry that is just in a decade old, right, compared to India, which is many decades ahead of Africa. Right. So the other context is that Africa is sort of a bit late into this. But the advantage is that I think we're going to leap forward the way we are advancing in the digital economy and the way Africans are adopting mobile. And that speaks to the second slide about the impact. So this is a study done by GSMA, which is the Global Association for Mobile Operators. they look at the impact of mobile on the global south. Obviously, the global north, the global south has more impact than the global north. Now, if you look at it, Africa, the impact of mobile on the GDP of sub-Saharan Africa is 6%. Asia is 1.4%, and Latin America is 4%. So this means that the impact that you're going to see, which correlates to the returns, and I'll talk to the returns in a second, is very huge in Africa. The second part of my response is that, so we as a firm do growth investments. So we now have a growth fund. And the growth fund is a very simple dynamic where we take companies that are market leaders in one country and then we scale them into the rest of Africa. By doing that, we begin to capture the unlocked potential that you see in the other markets. And the reason we're able to do that is because we have a ton of experience on the continent.
Who wants to take it?
You can take
I think I'll go ahead, yeah. So Eric gave a very good overview on what's happening in Africa. So in India, maybe I can give you numbers to justify what's happening in India. So in terms of, so presently around 500 plus active investors in India, out of which around 60% is local and 40% is foreign. But in terms of amount of dollar value, it is 65% international money and 35% local money. So that's the split between local and global. So what we're seeing is a lot of international money coming into India because of the scope and potential of India, the working population, educated, digital savvy, English-speaking crowd in India. So all the foreign countries across the world, the US, Europe, Israel, even China wants to come into India and tap the heavy potential. So we are seeing more international investors coming in, co-investing with the local investors. So creating a robust ecosystem around what's happening in India. So what we're seeing right now is the maturity that is happening, and I think most of you must be aware of the latest exit that has happened in India. Walmart acquiring Flipkart, one of the largest e-commerce deals in the world. So that has kind of shaken up the Indian ecosystem, and due to that, a lot of foreign interest will again increase going further. Everyone would like to have a pie of what's the action that is happening in India. So what I see is that more international investors would be definitely interested to come in, work closely with local investors to really make the ecosystem much more mature. So that's a take on what's happening in India.
Yeah, to add to that, yes, there is a lot of interest from international investors in India. There has been a total investment of $12.2 billion in the last year. That has been a merge of local versus international. But having said that, there has been more activity towards local investors, towards these companies. Initially, in the nascent years, local investors were not very savvy towards technology. They didn't have that kind of faith or maturity to understand how technology would add value to Indian businesses or to the country overall. But having said that, now there is a lot of government push. There is a lot of interaction with corporates and engagement with these early stage tech companies, creating the investment landscape locally also really high.
So you're saying that in India, it's the proportion is 60 local and 40 international in terms of investments. How will it evolve, in your opinion, in the years to come?
So it's 60% investors are international investors, as you correctly mentioned, but investment's still been high in dollar terms from the international investors. But we see that there will be more engagement because of adoption of this technology. So initially, India was just digitizing everything. Everything was manual, which was then digitized, and now it's moving towards disruption. So when people are seeing there has been a shift from the old age manual intervention to a technological intervention, that's when they are putting their faith inside this and will start slowly investing.
So to add to Krishna's point on digitalization that's happening in India, it's quite crazy actually. I mean, recently tons of CEOs from the US had come and visited the Indian government, and they were quite surprised on the numbers. So as I told, 1.3 billion, the population, presently 400 million mobile users, which is going to be 650 million internet mobile users in the next 2 years. So the government is doing quite a bit. So you must have also been aware of the social security program that has happened in India. It's the world's largest. 1.2 billion people have social security number, which is entirely digitalized. So the government is pushing digital across all services. Obviously run on Aadhaar. It's called the Aadhaar program. In the last couple of years, 200 million bank accounts have been opened all through Aadhaar. So everything is going digital in India. And so the government is putting a lot of push in creating that foundational layer of digital. Once that is set, startups can come and disrupt. So I feel that foundation is being laid right now, and I think with the next couple of years it would have been matured. And you will have a lot of startups, deep tech startups working on AI, machine learning, blockchain, coming using this foundation to build services and products. So I think that's pretty interesting.
Okay. Eric, I really like your comment about how Africa is getting mobile and how, you know, all the economy, or at least the digital economy, is driven by this fact. Can you perhaps tell us what are, in your opinion, the interesting areas of investment on the ground? Is it, I don't know, mobile money? Is it fintech? Is it cloud? I mean, what's the space to that extent in Africa?
Well, I just want to give 2 data points in sort of talking about the higher end of the ecosystem, the investment stack in Africa. So I talk about the startup space where the investment was, north of $500 million. And then when you look at the private equity space, about $100 billion has been raised and invested in different ventures. So what you see in Africa is that you have a very strong, which is a little bit different from the other parts of the world. Africa has a top-heavy private equity space where there are a lot of big corporates and institutions and funds that want to do very big deals, right? But a lot of the deals are still on the lower end. So there's a gap within the venture capital, growth capital space, and that's where we sit. And now to your question about how we see the dynamics evolving in Africa vis-a-vis local international investors, right? I think that the Africa dynamic a little bit mirrors what you see in India, but I think that people are now waking up to the opportunity in Africa. So a lot of investment that have happened on the lower end has been predominantly local investors, but if you take the private equity space, you have a strong foreign interest that looks at that space. And I think that you're going to see a bit of a merge between that in the venture and growth space as the ecosystem grows. But in terms of the opportunity in Africa, obviously Africa is 54 countries, right? So you cannot attack all of them. We as a fund decided to start with 5 countries, which is the King's country. So my first advice to you is to look for the countries that are more likely for you to do business. And I'll recommend the King's countries. The second is the sectors, right? So there are so many sectors you can look at. We focus on digital, and it's the same thesis, which is digitizing Africa's economy. Because online has become a lifestyle in Africa. We believe that online business is the next thing. So we're basically backing entrepreneurs who are taking businesses online. And we have backed companies in the fintech space, clean tech, edutech, health tech, and ag tech. Right? Those are the spaces that are receiving the most investment currently in Africa. And those are the spaces that you will find very, very interesting entrepreneurs. I'd like to conclude with a return slide. So if you look at the way that Africa connected with mobile, this study is a very interesting study that Freshfield did in 2015. What they did was they looked at 18 telecom, media, and technology companies in 18 countries, stock markets in Africa. So they looked at 40 companies in 18 territories in Africa. And they concluded that the telecom, media, and technology companies that were trading on the stock exchanges made 19% annualized return. So if you invested, for example, in MTN or Econet or Globo or any of Airtel, within a decade you made 19% return, which is 3 times higher than oil and gas. So sometimes I'm personally baffled that people think that Africa is a resource continent because you have the technology sector doing 3 times more than the resource sector. So I really believe that, and this is just the connectivity era. This is just connecting Africans to mobile. Think about the fact that now we're getting into the era where entrepreneurs are creating new technology, like mobile money, right? One of the phenomena with Africa is that credit and debit cards were very hard to adopt in Africa. The reason is that people don't have a credit history. People even don't have addresses in certain places, so you can't even find them, right? So it was hard to introduce that in Africa. But everybody had a cell phone. So a company called Safaricom in Kenya started something called M-Pesa, which was the ability for you to convert the airtime that you buy and put on your phone into electronic value. And then you can trade online with that. And today, everybody in Africa has mobile money. Especially in a place like Kenya, if you go today, you sit in a cab, the taxi driver, when you get off, they're going to ask you to M-Pesa me. Right. So mobile money has totally changed that phenomenon. Are you going to see that in the West today? I mean, I was just in the US a month ago, and I couldn't believe you go to places and people are asking you to use mobile money. Right? So this is an innovation that came out of Africa. And I think you're going to see more and more of such interesting innovations, primarily because, necessity is the mother of invention, and Africa has the most necessities. Right? And I can give you a lot of examples.
So basically, what you're saying is that innovation in Africa or even perhaps in India is totally different as the innovation we've seen over Europe or in the US. And there is a lot of innovations coming from this frontier market and going in mature market. How, is it the case as well in India? I mean, we can see that perhaps the most famous companies in India today are e-commerce companies. So how is it different to, I don't know, to Amazon or to these folks?
So, yeah, that's correct actually. Innovation is very different in India or in Africa for a matter of fact, because at the moment, as I mentioned, digitization is the main focus. So e-commerce companies are filling gaps at the moment. There are a lot of gaps in the system in order to connect customers to vendors or sellers or distributors for a matter of fact. First, these gaps need to be filled off for getting disruptive innovation into place. So that's what India is focusing on, or Indian entrepreneurs are focusing on, to fill up these gaps. This gap alone filling will take a bit of time, but itself is yielding a lot to investors as well. So just by getting things online or filling these small gaps, which we see like M-Pesa, as he mentioned, there's a Paytm in India, which is a mobile wallet. Now that company initially started as a wallet company. Now it has its own e-commerce line, ticket booking platform. It probably is moving towards a digital bank. So they are just filling these small gaps that are in the system right now. So if you'd like to add something more.
As Krishna said, rightly pointed that, initially the startup wave started with the B2C segment, the e-commerce, your Flipkarts, your Paytms of the world. But now what we are seeing is a deep focus on B2B sector, solving real business problems and creating products, services around AI, machine learning, blockchain being obviously the foundational layer, and solving real business cases. So for matter of numbers, 40% of the startups that got established in the past 2 years were B2B startups. So India wants to be the SaaS hub of the world. So software as a service, we would like to lead that race. We have around 950 plus companies in that space, and 900 of them have in the SaaS space. And out of that, 700 have been into deep tech. So as Antoine, as you mentioned, initially it was B2C. Now there's a heavy focus on B2B. Build in India and build for the world. So you solve a particular problem in India, a business problem, and that can obviously the similar problem would exist globally. So build in India, make in India for the world. So that's what we are seeing.
So let me give you one more example, since I'm sandwiched by two Indians. You
I'm on your side.
We'll work together.
So we're about to invest in a company, and it's a very interesting company. So in Africa, one of the big problems is that people don't have addresses. So he says, so how do you find people? How do you find places? How do you go to places? So it's a company that has built an app that is able to generate a digital address based on where you are. So I can send you a digital address, and you can come to me. And then it works through Google Maps or whatever map system you have, right? Immediately, that application, you can apply to many things. So here's a critical case of the lack of address being a major problem, but an entrepreneur thinking around and then developing a system that works both offline and online. And it have a time stamping system built into it. So if somebody is going to do an e-commerce delivery, for example, I can know that you delivered to my house at 9:55 p.m. and you cannot alter that.
Listening to you, it looks like there is something fueling the innovation in Africa and in India, which is the use cases mainly, perhaps the innovation in the business model. Whereas we've seen in mature market that there is a whole side of the VC capital flowing into an economy which is the very innovative technologic economy. So you look at AI, machine learning, blockchain, so you mentioned all of this. Is it the same in Africa? Is the innovation over there based on technology, really like breakthrough technology, or is it mostly what you mentioned earlier, filling the gaps of things not existing over there and trying to find, workaround to make things easier for people over there?
Actually, both. So I gave you some of the groundbreaking stuff, right? So I'll give you some of the not so groundbreaking stuff, right? So I invested in a company called Farmerline in 2008. It's a very simple idea. So they figured that all the farmers have phones. So how about we build a system that delivers information services to farmers, one, provides them access to market from their phone, and then provide them access to critical data that they need to make informed decisions. This company turned profitable 3 years ago. And we then evaluated the impact that we've had on the farmers that we provide a service to. Within 5 years, farmers that use our system have doubled their income, their net income, in the communities that we support. So what you see here is not something revolutionary, but it fills a simple gap of access to information and access to market. And yet you can correlate that directly to the incomes of the farming communities. Right? So this is an example of a company that is not done something that is wow, but you can see the direct impact. And so you see innovations in Africa that fix pain points, market bottlenecks, inefficiencies, and things like that. And those are also as important as the revolutionary ones that are like a digital address, right, or mobile money. So I see that in Africa, you're going to see two paths, what I call dimensions and determinants, in a sense that technology is going to play an active role in creating new technologies and disruptive tools that didn't exist before. That solves major problems along the value chain. And then you're going to see the intersection of, on the determinant side, the use of technology in sectors that creates efficiency, fix bottlenecks, etc. Another example is a company that I backed called eCampus. One of the biggest challenges in Africa is that access to higher education or education in general has been declining because of the lack of investment in educational infrastructure, because the population is growing. So if you're not catching up with that investment, then obviously you're going to have more people qualified, but less people having access to better education. So this guy decided that, why don't I put it on the phone? Why don't I build, because most students are on Facebook anyway, so let me build a Facebook-type campus. And basically launched it online. And suddenly this is basically gotten a life of its own, where now a lot of students are using the platform because the interface, it interfaces with Facebook API. It's almost as if you're on Facebook, but you can be chatting with your friends, but chatting about your homework or your schoolwork. So you're doing the same thing, but you're learning. This is not very revolutionary, but imagine the impact it has on students who have access to phones and how they can be more productive using their phone as opposed to maybe gossiping. I'm not saying there's anything wrong with gossiping, but I'm just saying that you have a system where you can be a bit more productive if you're a student using the same platform that you have just by plugging into our platform.
So maybe I would like to add something what's happening in India. I mean, Antoine, you were talking about innovations that are happening. So what I'm seeing is obviously all the top tech companies are already there in India. Your Googles, Facebooks, Amazons are already there. So they have a deep base in India. I mean, the largest office outside the US is in India. So a lot of tech talent in India. So most of the accelerator programs, open innovation teams, they run a lot of challenges. India-specific challenges, they identify problems and they put the challenges outside, and you get techies from India coding it and building products over it. So that is one way corporates are playing a deep role, especially the global companies, especially as well as Indian companies as well. So they have taken whatever the global MNCs are doing in India and having their own challenges and getting the entire population to work on solving these problems. On the second side, you have the government. They just recently had a hackathon in February, world's largest hackathon, where you had 10,000 plus coders coding at one point and solving India-specific problems. Out of that, 10 got selected, and then the implementation might happen very soon. The third thing we are seeing is a lot of foreign governments, the innovation teams, the Department of International Trade across UK, the Nordics, Sweden, I mean obviously the Nordics, then you have Netherlands, Germany, having their Indian arm in Bangalore, in Delhi, in Mumbai, and they run a lot of challenges, and even Israel, as Krishna you mentioned. So even Israel has a very good deep relationship with India. So they also run these hackathons, challenges that solve India-specific problems, which also can be taken to their respective countries, to Europe, to US, to Israel. So we're seeing these three things panning out. So you have your corporates, you have your Indian government, and you have foreign governments working closely with Indian government, and obviously solving India-specific problems first, and taking that globally. So this is what we're seeing, and it's pretty interesting.
Let me add, so in addition to this, we see this in Africa as well. There are two more catalysts that we have seen in Africa, which is quite interesting. The first is a very strong paradigm shift. So when I was going to school, the phenomenon in Africa was when you finish school, you either get a job or you get out of the country. Like it was an illustrious thing to say, I finished school and now I live in London. I'm not saying there's anything wrong with that. But the Generation Z today pride themselves in starting their own company. Like when I started as an entrepreneur, I couldn't tell my dad. I mean, my dad found out later on through the newspaper that I had a company. He thought I was going to work for someone. I'm not saying the working was for someone, but that's how the cultural shift is. It's an amazing paradigm shift that you see on the continent, that the youthful population now believe that they can take their destiny into their own hand and build something out of nothing. So that's one. The second is the return of the African diaspora. So due to the credit crunch and all that stuff that's happening around the world, there's a huge returning diaspora that have capital, experience, and expertise. And we're beginning to see them connecting with the local entrepreneurs. And that is the second very important phenomenon that is catalyzing this revolution. The third is the expatriate market in Africa, where more and more people out of Europe, out of the US, for whatever reason, want to experience Africa. And so they come and they either invest, they partner with companies. Some of them even start companies. One of the funny debates around Africa is how a lot of foreign founders become locals to start companies because they realize that it's easier to start a company and raise money in Africa than to do it where they came from.
So, I mean, to add to Eric, I think very similar trends in India. So, as you said, the first one, pride in starting a startup. So now in India, it's considered very cool that you're an entrepreneur and you're raising money. So it's kind of cool status. You're kind of respected all across the society. And initially, it was tough to find a bride, but now being an entrepreneur, you can find a girl and get married. I'm serious. It was pretty bad 10 years back. So now it's kind of changing.
We can take that. We'll end up
Second, as Eric said, expatriates coming back to India. Obviously, tons of Indians in the US, in Europe, leading tech companies, major companies globally, coming back to India, setting up startups from scratch. With their global experience, it becomes much easier building in India and then selling across. And third that you mentioned was?
Expertise.
Expatriates. Obviously, there are tons of foreigners already working in India from Europe, US, obviously even from Southeast Asia, from Korea, from Japan, from China. China is coming in big time into India. So it's kind of between US and China now, the investments fight that is happening in India. So US investments versus Chinese. So
I'd like to keep 5 minutes for questions, but I have a very last question for you, which is I think interesting for the audience here, is when it comes to corporate investing in India or in Africa, what do you see as market move to this? Can you perhaps quote a couple of examples of compelling examples of corporate investing in startups on the continent?
Actually, the reason I haven't quoted any examples, yesterday there were about 3 examples from this stage. The gentleman from Bosch talked about the investments invest in Africa, and then GE Ventures talked about the investment in Mkopa. And there's just so much happening in that space in corporate investing, and I kind of mentioned that within the $100 billion bracket that you see in private equity and the top end of the market. I think what the corporates generally are very hard, are not in the sense able to do early stage, seed investing stuff. And that's understandable, right? But I think that there's, like I said, it's a meeting in the middle, right? Where you need to kind of look down a little bit and probably work with some of the smaller funds or entities that are on the ground, because understand corporates are very big, and so you're not made in that way.
Okay.
For corporates in India, actually, I can tell a bunch of points. So initially, corporates were just investing, being financial investors, testing waters with these companies, trying to get faith in that kind of technology where they can start adopting it at a later stage. Similar to Africa, corporates are investing only in the seed stage at the moment, or there are big players like your SoftBanks and your Tencents coming and investing at the higher level. There's a big gap in between. The Series A investments have just dropped down completely, making it difficult to have follow-on rounds. But having said that, again, we as a accelerator, incubator, or corporate innovation program enablers, we make sure that we do the matchmaking of these corporates with these high-tech companies. We conduct hackathons, learnathons. We actually make a lot of industry meet nights where we get BSFI industry, we get health tech industries, and we make them meet the right kind of founders to, get the right kind of solutions, engaging more of these corporates internally with the startups and creating that faith in technology. Corporates in India actually have a lot of problem in cyber risks. So cyber security is actually a very big focus in India because there's a lot of cyber risk that these corporates fear in terms of losing their data, in terms of enabling the technology or using it in a much more efficient way to maintain privacy of their users and of their data. So that's where I see that once cyber security kicks in India, in the next 2 years probably, that's when corporates will start getting more engaged.
And to add to Krishna as well, so if I break down the investments that are happening in India right now, so 40 to 45% traditional VCs, 20% odd in CVCs, and remaining angel and angel networks. So if you see the 20% CVCs, so you have your, obviously those 20% majorly by the global corporates in India, so your Googles, Accenture's of the world who are investing in startups. And as Krishna pointed out, these corporates are more interested in later stage, growth stage companies and less for seed and Series A. So there's a gap there. So as the Indian ecosystem matures, the CVCs would get more interested in early stage startups, solving big problems. So that's what I see how the trend would pan out.
So perhaps I'd like to keep a couple of questions in the audience if you have some.
Hi, good morning. First of all, thank you for a very interesting panel. I think it's interesting for once to look at maybe geographies that we don't debate all the time. So I think the question goes more for India because it's one single country. Obviously, there's a lot of disparities between different regions. So I guess my question is twofold. First of all, I mean, I'm guessing, the main cities is where most of the innovation is happening, but can you just say which regions is most concentrated in? And also, do you think that innovation can contribute to close some of those gaps between different parts of India?
So I'll take the first part at least. So as you correctly mentioned, tier 1 cities or metro cities is where most of the innovation is happening. That's where most of the capitals are, most of the corporates have the head offices. So, Delhi and Bangalore were leading. Bombay is catching up now being the financial hub. But having said that, most of the revenues that are generated by companies are in tier 2 and tier 3 cities because that's where people understand the real problem. That's where the ground problems are there. And that's where people are more open to adopting these new technologies and paying for them for ease of lifestyles. So that's where I see, is more of the action in terms of revenue, but obviously more of the startups or the talent emerging in the tier 1 cities.
So yeah, to add to Krishna as well, so by within next year, the entire India, all the villages are going to be connected with broadband. So once that happens, your tier 2, tier 3 and the villages of India, there'll be a lot of innovation being driven from the villages. So once that happens, that's going to be a total game changer. And then it'll not only be your Bangalore's and Mumbai's of the world, you would hear a lot of tier 2, tier 3 cities really coming up on the map. So the foundational technology being laid. So I think within a couple of years, you would hear a lot of other cities cropping up in India.
Thank you for a very interesting discussion. I'm Girish from Total Energy Ventures. And we certainly have an interest in all these regions. What I heard today was the amount of new startups coming up and the amount of money going in. But the issue which also concerns me as an investor is where are the exits? And have you seen any exits? What is the potential for exits? Who are, is there an IPO market or are there corporates coming and and taking those companies out. So it'd be helpful to sort of get a view of that side of the equation as well.
I think the answer will be very different from Africa to India, so perhaps we'll start with Africa and I will let you.
Okay, so I'll give you two examples. So the first is the early investors in a company called Iroko TV in Nigeria. When the private equity guys came in, they made 320% net return. All right. I'll give you a personal example. One of my companies I invested in 2013 is a company called Teranga Solutions, which is the travel tech space. Last week, we announced a merger with a Norwegian company because we realized that we were complementary and there was an opportunity to take over the emerging markets, or what we call frontier market travel tech space. And by merging the two companies, we basically tripled our market value and we suddenly became the market leader. And that's why we did that merger. So you're going to see more and more of such exits, but I agree with you, they're not a lot right now.
So about India, well, in India, mortality rate is very high to start with. It's about 30% today. But having said that, the exit market is also maturing. So we see majorly corporates coming in and buying out early stage companies, buying it early, buying it cheap, kind of a mentality where they see the technology being really disruptive and where they can add value. So most of the exits have been from global corporates, very few handful from Indian corporates. But now recently there has been a IPO market set up for SMEs in India by the National Stock Exchange, where they are giving exits via IPOs to early stage investors, angel investors, because of the gap in the Series A and the Series B follow-on rounds. This IPO market is going to be a good opportunity for exits for Indian companies.
Yeah, and Girish, to add to Krishna as well, I mean, you must have heard about the Flipkart Walmart deal. So that's kind of shaken up the ecosystem. So with that happening, you'll have a lot of other interesting exits that's going to happen. And last year there were around 50 M&As. So one side is your IPO, as Krishna mentioned. IPO is one way of exiting. And you see, I'm seeing a lot of corporates, global corporates coming and acquiring early stage companies in India, which is not being publicized too much. But there was 50 M&A deals that happened last year and growing at 20-25% year on year. So I think M&A is one side and then your IPO is another route for exit.
Okay, so I think we have to stop, right? Yeah. Okay, sorry guys. So we would like to thank you for your attention, and please do not hesitate to reach out to us if you need to discuss. And hopefully you like this panel and the answers of our panelists. Thank you guys.